Vishwas, tell me whenever you are ready, we will start the session.
Sir, 3 minutes, sir. We will start.
Okay.
Okay, sir. Sir, shall I start introduction, sir?
Yeah, quickly.
Yes, sir. Thank you, sir. Good evening, all. Thank you for all joining us this evening. This is Vishwas, digital marketing expert from Rira Consultants LLP. As we all know that we conduct monthly webinar on GST series for real estate. Let me take a privilege to welcome you all for all today's session on GST. Today, let us all understand on handling GST notice for carryover projects from service tax and VAT regime, which is one of the crucial aspects. We are pleased to welcome our speakers for the day, CA Venugopal sir, CA Rajesh sir, and CA Ashika madam. To start with, I am honored to introduce CA Venugopal sir. CA Venugopal sir is a founder partner in Venu and Vinay Chartered Account since 2002. His academic credentials include securing All India 45th rank in CA Finance. He is also certified information system auditor. He has completed various other certificate courses from ICAI, namely DISA, course on business valuation, course on internal audit, course on fraud detection, and forensic accounting. He has also completed a 1-year course from IIM on data analysis and business intelligence. He has authored various industry-specific handbook on GST. He has contributed to the technical guide on GST audit released by ICAI, other publication materials. He conducts workshop on filing returns with ease use of automation. He has developed a lot of Excel-based free utilities on GST like JSON Reader, creating JSON files, GST Invalidator, composition versus regular benefit analysis, GST Impact Reader, real estate project switch decision analysis, GST audit working paper tool, and many more. He is a GST faculty for ICAI and conducted various workshops and webinars. His other areas of the practice includes, apart from audits, he has hands-on coding in Visual Basic, Net, Python. He also reviews database design. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He is the man behind the development and managing of cloud applications like TaxSmile, Insta's Financials, and others. Now, it is the time to introduce our second speaker for the day, CA Rajesh sir, who is one of the top chartered accountants in practice. He is partner at Venu and Vinay Chartered Accountants and proprietor of RKTR & Co. He is practicing in the field of indirect taxes at Bengaluru from more than 20 years and advising clients on compliance tax planning and representation to the government and authorities. He has authored number of books on GST, central exercise, service tax, VAT as author, joint author, as well as assisting author. To name some of the books, Handbook on Annual Returns and GST Audit, GST Reckoner, GST Tariff, Practical Guide to Service Tax, Central Excise Made Simple, Central Excise Law and Procedure, and KVAT Audit Manual. He has also contributed for background materials on GST and UAE VAT published by ICAI. He has been training the professional students, industry, and departmental authorities in the field of indirect taxes on invitation from ICAI, ICSI, NACIN, tax departments, and state and central educational institutions, trade bodies, professional bodies, and many more. Written many articles on central excise, service tax, VAT, and GST for various professional journals. Now I am honored to introduce our third speaker for the day, C.A. Ashika Madam. She is the Senior Manager GST Department in Venu and Vinay from January 2021. She became an associate member of ICAI in 2013. She joined as a consultant in GSAP and Co. in March 2014 and had a comprehensive exposure to the GST ranging from examination of taxability, compliance, verification, educations, and appeal and representation at all levels. She was a member of editorial board of a GST monthly bulletin by name Tax Talk, which is read by almost 30 plus chartered accountants and others. Today, from these experts, let us learn more about applicability of service tax for joint development projects, transitional provision for carryover projects, levy of service tax versus GST, demands unpaid liabilities, levy on development rights under erstwhile law, discharge of landowner related supplies. Now I request Venu sir to take over from here. Thank you, sir.
All right. Thank you, Vishwas, for doing the wonderful introduction, and welcome you all for the monthly webinar on the real estate series. And special thanks to RERA Consultants LLP and the Naredco for hosting these sessions, the knowledge series month over month. Last session we had about the handling notices under GST and reason for the notices, but now we are here to discuss one very other important aspect, which is the projects where there is a switch happening from service tax and VAT era to GST era. It's very important that we understand the taxation of real estate under those erstwhile regimes. It's also important that how much of the taxes to be paid or not to be paid, or if it is short paid, how do we assess and pay it under GST regime? Can there be any tax liability that can be, if assuming something is not assessed or paid under either VAT or service tax, can it at all be assessed and paid under GST is also an angle that one has to look into. And this being a law kind of evolving, still there are more unsettled issues in the regime of the real estate, including today, even after having a 3/2019 notification, which is elaborate, which is act by itself, still there are some unsettled issues, either could be on the valuation or availment, and especially moving on the plotted development. And the notices are definitely coming because alongside of GST, we have the Real Estate Regulatory Development Act, RERD, we call it as RERA, which got also implemented. And most of the projects, it was necessary for them to get registered since they have been getting sold during the course of its RERA implementation, even though the project has began prior to the RERA. What's the connection of RERA for these notices? Today, the transparency is so much, entire information is shared across by one department to another. And the easy access of your projects is there on the RERA portal, which can easily be compared by the assessing officer, who is called proper officer under GST, vis-a-vis the quantum of the data that have been reported. And I'm sure multiple amount of notices have been issued for various projects by the enforcement, or could be under audit wing, and it is at the various stages. So we thought it is apt that we should have an education of what is the taxability of the construction services under the joint development agreements prior to the GST regime. So we need to know, I'm sure by now we all know the taxability under GST regime. So prior to it, what is the taxation? We'll do a quick recall. And if the taxes were not paid, short paid, how do we deal with that under the GST regime? These are the two aspects that we are going to discuss. And with me, I have my senior colleague, Rajesh. As you all aware, Rajesh handles the litigation matters. So whenever matter reaches to the higher forums at the tribunals, so he presents the case and represents the taxpayers and fights for the justice and get a right cause. Along with me, I have my colleague Ashika, who had put up this presentation for you, and we will be walking through the various aspects of the service tax and VAT and carryover aspects. Yeah. So I invite Ashika to start the session, and Rajesh sir, please step in wherever you need to add value.
Surely, Venu, I'll do that.
Yeah. Ashika?
Yes, sir. So today, before moving into what should be the transitional provision, how the applicability will work in service tax and under GST for the project carry forward, let us have a quick recap of the provisions which were applicable during pre-GST regime and how the same worked under GST regime. So first, starting with the service tax applicability. Now, under service tax, on this joint development agreement, also there was a lot of dispute and litigation was going on. Now, before stepping into that, let us have a recap of a basic provision of service tax in relation to construction service. Under service tax, also there was a charging provision, which is section 66B, which says about that any service which has been provided by one person to another for a consideration is liable to tax under service tax. Over there, service definition was given, which is very exhaustive definition they have given, not unlike GST. In service, they have specifically defined what will be considered as a service for the purpose of discharge of tax under service tax law. They have provided that any activity which is carried out by a person for another for a consideration. So any person, if is doing any activity for another person, it was regarded as service and tax was applicable on the same, but there were certain exclusions. Like in GST also, we have an exclusion under Schedule 3. There is also a concept of declared service under service tax, which says that services which are declared, that is 66D, any service which is covered under this section, even though may not directly fall under the service, but by way of this deeming provision, it was considered as a service for the purpose of service tax law. Declared service is like somehow similar to Schedule 2 of GST Act, which says about activity or transaction to be considered as supply of goods or services. So declared service is more or less similar to Schedule 2 of GST. Then there is a concept of negative list under service tax design, which is dealt by 66E, which specify the type of activity which will not be regarded as services. Similarly, like Schedule 3 of GST. So coming to the definition of service, even though they have given a broad definition, what would be considered and include declare service, this exclusion is an exception to the negative list. So over here, they are specifying that any transfer of title in goods or immovable property by way of sale, gift, or in any other manner was excluded from the definition. Now, if you will see under service tax, from service, what they are excluding is transfer of title in immovable property. This word you will not find under GST. Though they are in Schedule 3, they have provided activity which is not covered under, which not be regarded as a supply. However, the word immovable property has not been used. In service, they have used the word that if there is a transfer of title in immovable property, then no service tax will be leviable. Now, why I am impressing on this word, we'll discuss in the latter part. Immovable property. Now, immovable property, like GST, even in pre-GST regime also, it was not defined. So we take the help of general clauses, which says immovable property shall include land, benefit to arise of land, things attached to earth, or permanently fastened to anything attached to the earth. So this definition, which has been given in general clause, it not only covered outright sale of land, but it also covered benefit which is arising out of land. So like the development right, which is the most disputed one, even in pre-GST regime also. So development right is a right benefit which is arising out of land, being a part of immovable property. So whenever there is a transfer of this, it was not regarded as providing of service from landowner to developer, unlike GST regime. Because GST regime doesn't use the word immovable property. Thereby, in service tax regime, it was excluded. So the transfer, even though there is a transfer of development right from landowner to developer, but it was not regarded as a service for the purpose of service tax regime. Then we discuss about the declare service. Like Schedule 2, Section 66E of declare services also covered construction of complex building, civil structure, or part thereof, including complex building intended for sale to a buyer, wholly or partially, except where the consideration is received after issuance of completion certificate by the competent authority. Is the similarly worded, the way it is worded in the GST for construction service. So wherever there is a sale of flat or apartment or a commercial space, which has happened before you receive OC, it was taxable. Similarly, in the service tax regime and similarly in the GST regime, and the sale which happened or occurred after OC, there was no GST or no service tax. Likewise,
Ashika, I just want to add a point here. So the reason why I am interrupting members, I want you to pay an attention here. Though Ashika explicitly said that there is a levy, but it is also important to note that she has specifically used the word immovable property under service tax regime and the sale of land under GST regime. So those who are aware of the provisions of the GST, please do not think that mutatis mutandis, they are applicable in the similar way under the earlier regime, or whatever the taxation you are doing under the earlier regime, it is not exactly the same under the GST regime. The answer is no. So that thin line of difference of the words is important. So that is where I wanted you to go back again here, that there is a word definition called immovable property there, and which he has referred to General Clauses Act. Yes, Ashi.
so likewise, the way Schedule 2 cover for the, though if you all know, when the GST was introduced, at that time, Schedule 2 was creating a deeming fiction, whereby it was saying that if the activity is specified in Schedule 2, it will be regarded as applicable. So that has been retrospective amended under GST, and they have said Schedule 2 will operate only when the first 7(1) is satisfied. That first it should be supplied, then you should go to Schedule 2 for the purpose of classification. Unlike over there where it has been used for classification, under service tax, there was a specific provision for construction service and works contract service, because these services were dispute was going on. Reason being, construction was regarded as a sale of immovable property. As is the sale of immovable property, either it is before OC or after OC, it doesn't matter. So there should not be any service tax on the same, because there cannot be any service element. So that was the dispute. To end this, they include specifically under service tax as a declared service. Similarly, for works contract, as it was regarded as a deemed sale of goods under Article 366. So to basically move out the lacuna in the law, they have specifically included under declared service, works contract, and construction service, whereby they ask us to pay service tax. Now coming to the part of taxability, the transactions which are involved in JDA for the purpose of taxability under service tax regime. Supply from landowner to builder. As I said, supply from landowner to builder of a development right was not taxable under service tax regime. There was no concept of development right under service tax regime. This has only come under GST. But supply from builder to landowner, in case of area sharing, where the property, part of the property or constructed flat which has been allotted to landowner, there is a GST, sorry, service tax is there. And like under GST, under service tax also, service tax was applicable. So whatever the amount or the flat which has been allotted to landowner, on that amount you are liable to pay service tax. Builder, landowner to third party or an ultimate buyer, service tax is applicable, and similarly is the provision under GST that you have to pay tax on the same.
Slide one. So here, when you compare with the GST regime, there is one small change. When you look at the landowner to the builder under the GST, we are now levying the development rights, and it was a forward charge levy, and subsequent to from 1st April 2019, it moved as a reverse charge in the hands of the developer. But in the erstwhile regime, when we see, even though it is a supply of service, by the preliminary entry, the definition itself, it has been excluded, saying that the activity do not include the immovable property and the development right got into the form and parcel of an immovable property. And we are of the view there will not be any levy on the supply by the landowner to the builder, because in a landowner, when you generally ask, he would say that, see, I have parted away my land out of 100% of the land. Now 60% of my land is gone, or 65%. I'm only left with 35 to 40% of the land plus a constructed units of that. So what I have sold is land, what I have got is construction service. So technically that's what the landowner's argument, and there are many judgments under the SESTAT saying that the levy wouldn't apply. So in terms of the carryover of the projects, now if an officer who is unaware of the facts and again intending to levy a charge on the development right aspects, it can be contested. So it is also equally important. Wait for the notice and look at what are the aspects which are being taxed, proposed to be taxed, and reply accordingly. Yeah, please continue.
Now coming to the part of GST. Under GST, Section 9 is the levy. Section 7 defines the scope of supply, which is very wide. Everything, all form of supply is covered, even barter. Like over here in a JDA, landowner is giving the land, part of undivided share to developer, and developer in turn is giving a construction service to a landowner. Being fall under the scope of supply, it is taxable. Like as we discuss about declared service under service tax regime, there is a similarly worded provision under Schedule 2, which says activity to be classified as good and services. Over there also, if you will see the way the construction service definition is worded and the way the works contract is given, it's similar to what is mentioned under service tax design. But there is a slight difference. For construction service, it is same before OC or after OC. Before OC taxable, after OC no tax. But in case of works contract service, there is a slight difference. Under service tax design, works contract of both movable and immovable were covered, unlike GST, where works contract of only immovable is covered. So it will consider as classification will fall under works contract service only if it is in relation to immovable property under GST. Again, like we discussed about the exclusion from service definition, transfer of title in immovable property. Here in the GST Schedule 3, which specifies that activity will not be treated as supply of goods or service, it covers sale of land subject to clause 5 of para 5, clause B of para 5 of Schedule 2, sale of building. So as Sir said, the word which is used in service tax design is immovable property, and the word which is used in GST design is land. And there is a huge difference has been created due to use of these two words, because immovable property, being a wider term, also include benefit which arise of land. But when we read sale of land, not land, sale of land, this definition, this exclusion somehow get restricted. So benefit which is arising out of land cannot be put outside the taxability ambit under GST, and therefore the transfer from landowner to developer as a development right become taxable. So if you will, this is the definition we have borrowed from other act, just to show that if we read immovable property, it is also include like benefit arising out of land, things attached to earth, permanently fastened. Similarly, in a land definition also, it includes benefit arise out of land and things attached to earth. But the difference which arises over there, they just did not use the word land, they are using sale of land. Thereby, the benefit that arise cannot be covered over under GST design. So you want to add something?
Yeah, so this is the clear distinction. Benefit arising out of the land is also an immovable property, but however, what is exempt under GST is only land and not the immovable property. That makes it very clear that the development right would be taxed under GST, while it could be considered as an exempt under the erstwhile law. Now, not just that, the way the taxation also happens is also a little different. Erstwhile, we had services separate and the goods separate, so which is the VAT. But here, we are only charging GST. And as Ashika mentioned in the beginning, by virtue of Schedule 2, the both goods and the services are clubbed together, and we are only charging as service tax related GST. So you cannot also do a like comparison of the earlier. So under the earlier, we had a cot, most people composition is something people would opt under VAT regime, or under service tax, we had abatement. Again, so there are different percentage and owing to the different things. So the valuation computation mechanism is also is different. So it's also important as we understand the levy and exemption, the method of valuation and computation also needs to be understood. Yes, Ashika.
Like we discussed for service tax design, similarly for GST, from landowner to builder, that is regarded as transfer of development right, GST is applicable. Prior to 1st April 2009, GST was payable by landowner under forward charge. After April 2009, it is payable by developer under RC. Transfer from builder to landowner, constructed property. That constructed property, like it was taxable under GST design, it is similarly taxable under service tax design. The valuation mechanism which is provided under GST is similar to what is there in service tax. That is flat, similar flat which is allotted during the allotment to landowner. That value need to be adopted even for the service tax also, and similarly is there under GST. Builder or landowner to buyer, at whatever the transaction value you are selling it to your ultimate customer or buyer, on that you have to pay service tax. Similarly, under GST, same thing is taxable, same manner. Now coming to the part, as we have brushed up what were the basic.
Ashika, I want to add, or rather, come in at this point in time. Okay, I think all the participants might have been hearing what is service tax related provision, GST related provisions, and all these things. Primarily, the topic for the day is to how to handle notices of projects which are started prior to the introduction of GST, continued after GST, where the authorities are coming and trying to say, boss, you are liable to pay tax, which you are not paid either in the service tax regime or during the GST regime. Or so in that scenario, they are trying to say you're liable to pay tax. Now, from the developer perspective, there are a lot of confusion which is arising. Whether I need to pay tax on a JDA, which was entered somewhere say 2013 or 14, but project would have sometimes started but going on during 2017, getting concluded say somewhere in 2022 or 2023. There may be situations where the project, though JDA was entered, the project couldn't be launched because of various reasons, including legal or so many other reasons, but started only somewhere in December 17 or January 18, but getting completed now, somewhere in mid of 2013. There may be also a situation where majority of the work was completed before introduction of GST, but the completion certificate or the so-called occupancy certificate was received later because some deviations were there. So there can be two situations where the completion certificate was received before April 2019, but after July 17, or it have been received after April 19. So all this permutation combination can exist in these projects which are falling in both GST regime as well as service tax regime. So if somebody asks, sir, whether these transactions are liable for service tax or for GST or for both, there is no straight jacket answer to this. The reason being, we have to see various factors in this scenario. The factor number one, when was the JD entered? What was the terms and conditions of the JD when the development right is said to have been transferred in favor of the developer? When is that right of the plan got approved, and as per the plan, right to sell came back to the owner as well as his share of the flats through a sharing agreement or a supplementary agreement? And when is this handover? All these factors have to be considered, and based on if one of these factors varies, then the entire answer would change. But presently, some of the authorities are coming now and saying you are liable to pay service tax. You are liable to pay service tax on a particular transaction under a particular JDA. You can simply say, boss, I may be liable, but today the time limit to issue show cause notice is over. So therefore, you cannot issue me any show cause notice. Accordingly, no service tax demand can be made. That at least categorically we can say. So what they are trying to do is that Okay, if I try to ask service tax or for that matter VAT, the taxpayers may escape. So they are not trying to ask the demand of service tax or for that matter VAT. They are trying to come out and say, see, you have the completion of the project is under the GST regime. Hence, you are liable to pay GST on those transactions, especially any contract which is entered after 2018, 25th January 2018, where there was a notification of GST which talked about the liability to pay tax arises at the time when the flats were handed over. Then later, one more notification came in 2019, where it came out and said, when they receive a completion certificate, that is a point in time where the taxes needs to be paid by the developer on the services. So with all this confusion, Ashika is going to now discuss why I gave this background is the further discussion has to be understood in the light of the questions which I have raised. Then only we will be able to appreciate the future discussion. She's going to now discuss about the transitional provisions, how it is, and what it is. And in fact, I want to highlight one of the aspects before we go into the transitional provision discussion. Ashika can just go back to the first or second slide where you did brought out section 66B provision. Yeah. I want you all to see this slide where the charging section of service tax, how it was reading. There shall be levied a tax at the rate of 14% on the value of all services other than those specified in the negative list, provided or agreed to be provided. Agreed to be provided. I'm highlighting the fact that agreed to be provided in the taxable territory by one person to another and collected in such manner as when prescribed. So please note, the levy was not only on the services provided, it was also covering the agreement agreeing to provide a service where a consideration is received. As if somebody referred to circular 151, which Ashika also discussed about it, there it says the consideration what the developer is receiving for doing a construction service is that of a development right. So if many cases an argument is being taken, it is not yet conclusively decided yet, but the argument is being taken to say, see, I have entered into JDA where I agreed to provide the construction service, and consequent to that agreement, I've already received a consideration in the form of a development right. So therefore, the charging section or the taxable event of this transaction has already occurred during the pre-GST regime on the date of entering into joint development agreement. Hence, there cannot be a one more taxable event in the GST regime is an argument which is being taken. So with all this background, I think maybe Ashika will explain what is the transitional provision talks about and what points we have to take, all those aspects which Ashika can explain. Ashika can go ahead and explain further points, please.
Now, moving to transitional provision part. Section 142.10, the section which are relevant only we have highlighted over here. Section 142.10. Now, if you read this, it's provide that save as otherwise provided in this chapter, the goods, services or both supplied on or after the appointed date in pursuance of contract entered into prior to appointed date shall be liable to tax under the provision of this act. Now, like the sir said about the service definition, provided or agreed to be provided, both are covered under service tax regime. Now, when we come to GST under transitional provision, there may be a case where you might have entered a contract under pre-GST regime, but goods, service, or both have been supplied after the 1st July 2017. So even though where the contract is entered prior GST, where you have agreed to provide whatever means you have entered the JDA prior to under pre-GST regime, even though the service if provided under GST regime, this transitional provision is saying that on that service which has been provided under GST regime, you have to pay tax under GST. Now coming to second part, section 142(11). It says that notwithstanding anything contained in section 12, time of supply of goods, no tax shall be payable on good under this act to the extent the tax was leviable on said good under the VAT of that state. So if even though as maybe due to pre-GST regime provision, point of taxation may not arise under pre-GST regime, it might have arisen under GST regime. But if you have, even though you have point of taxation arised, you paid the tax, maybe supply of goods you are doing now under GST regime, it doesn't matter. If you have paid under pre-GST regime, there is no need of payment of tax under GST regime. Like for goods, similarly is the verdict for services. Notwithstanding anything contained in section 13, no tax shall be payable on services under GST Act to the extent tax was leviable on that service under service tax under the Finance Act of 1994. Section 174. As the GST coming into picture, the old act has been repealed. Now the question which arises, as old act has got repealed, what will happen to the tax liability which has arisen in that period or which may not have been paid, or where the inquiry is going for service tax regime, how that can be recovered? So for that, section 174 work as a saving clause. It provides, even though the repeal of the said act or amendment of the Finance Act to the extent mentioned in section 7, subsection 1 or section 1, that it shall not affect any right, privilege, obligation, or liability acquired, accrued, or incurred under the Amendment Act or Repeal Act or order under such repeal or amended act. So even though any unpaid liability is there of pre-GST regime, that can be recovered, even though those acts are no longer applicable. So you want to add something?
No, I think you complete this, then I will just pitch in for some additional points.
So from here, I want you to take transitional part.
And you can just go back to the previous slides. Yeah. When you want to add something?
Yeah, just one important point in my view, again, from the litigation, you can definitely add it, is the time of supply is also essential to be looked into the earlier acts. So something has been transitioned from the earlier law to the current law. So though we have a saving clause under section 142, 10 and 11, if something has been supplied under the earlier law, levy originates and has to be assessed and computed and demanded under the earlier law. If the levy is continuing, and we also have a definition of continuing supply, so then we come to 142(11) to assess how much has to be carried forward to GST also. So considering that point, when we have an exchange, which is like more like the barter, where I gave a development right and the construction services have been provided, we also need to assess and see at what point the demand has arisen and when we have to pay taxes thereon. So that is why the words used there also matters. Leaving that rest, you can take up.
I think I asked Ashika to extract, not to just write something about section 142.10 with a certain point to bring out. If you see at the opening sentence of section 142.10, it says, save as otherwise provided in this chapter. That means if something is set out in other portion of this chapter where that 142 lies, then only that will apply. If something contrary to this is there, then that will prevail, not this section 142. So what I want to highlight is, though it says any services, I'm sorry, any supplies which is happening under the old contracts during the GST contract, it is not necessarily that all such work which is executed in the GST regime will be liable to tax. If there's any exceptions given in other provisions, that will prevail. Now, when we come to section 142.11, there are three subclauses. Here two subclauses are extracted. The third subclause talks about if there is any works when there is a both VAT and service tax is paid on any works contract. So there is a past tense paid is there. So it's an adjustment concept. In my understanding, that is not applicable to the given scenario. So let's not talk about it. But here, when they are referring to section 12 and 13, the definition, what we are looking out here is from the definition of a service or goods under the GST Act, not under the Restwhile Act. So considering the definition of service read with Schedule 2, the activity what is said to be carried out by the developer to the landowner is in the nature of works contract, and that would be specifically covered within the meaning of a service. So 142.11b is applicable. So my understanding in this is any contracts where the point of taxation, rather the definition says leviable. So the levy has occurred in the pre-GST regime, then that particular extent of a transaction cannot be subjected to levy of GST. And that is the reason why I told in the beginning, when there is a joint development agreement where somebody has agreed to provide a services and already received a consideration in the form of a development right, which is irrevocable JDA, then in such a scenario, the levy of service tax has already occurred. Hence, there cannot be again a demand of GST on the same. This is my view and standpoint, and this is what I want to contest if any notices do come. Ashika, can you just move on to the next point? Next slide. Here, this I can only say, if something right privilege accrued, it will continue, but obviously the time of limitation will apply wherever there is the time limitation of 5 years of the relevant date has effectively completed. Hence, I don't think any service tax demands can be there on those transactions, or for that matter, VAT demands for the past. Next slide, please. I want to bring out this decision. AAR are not binding precedents for other cases, but still, one of the aspects which they have said is like this: if there's any partially completed flat booked in the pre-GST regime, then they say whatever has happened up to 30th June 2017, that would suffer service tax. Whatever is being done after 1st July 2017, GST is applicable. Now, in this context, I would also refer to one Supreme Court decision, it is not cited here, where Wazir Sultan Tobacco is a well cited decision of Supreme Court in the context of levy, where they said if a particular transaction was happening And at that time, the levy was not existing, but there was a collection point. In any taxes, there is a levy point and a collection point, and both can be synchronized at a one point, or it can be postponed. The collection point can be postponed. Here's the situation where the supply is a levy, collection point, they have deferred based on the time of supply, invoice date, blah, 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 whatever it is. In the case law which I am referring, it was a excise duty case. Some additional excise duty was levied for the first time. It is not exemption, it was levied for the first time, where all the provision of central excise is applicable. Levy is on the manufacturer, collection is at the time of removal. Some goods were manufactured, but it was in stock, but had not removed. Then the new levy was introduced. The question was whether the goods already manufactured before the new levy was introduced, at the time of removal, are they required to pay the central excise duty? Supreme Court comes out and says, when there is no levy attracted, then there is no question of collection. So in this scenario, when some activity which is already a subject matter and which has not all happened during the new regime of taxation, that cannot be subject to tax in the new regime. Similarly here, if any supply in the part of all this constructed activity or a construction which has occurred pre-GST, that supply in effect is already occurred. So hence, there cannot be a levy of GST on to the extent of the works which were completed before the introduction of a GST. This is supported by Supreme Court. There, though the Supreme Court decision is not cited, this advance ruling is giving out that proposition. Since it is the department's own view, obviously that can be cited, and to that extent, if there is its advantages, you can keep out the demands to that effect. Okay. The second part I am not getting into because I don't agree with this. Next, Ashika, can you just move on? Yeah, Ashika, you can take a transitional credit part of it. Then if anything is there, I'll pitch in. Ashika, you're there?
Yes, sir. So transitional credit, like under pre-GST design, they were having two supply. One was from the developer point of view, I am talking. When the developer is supplying to a customer, they were given an abatement of 75%, and on 25%, they were discharging tax with no ITC. The second part was the work which they are doing for landowner, on which they are liable to pay tax on a deemed value. That service which has been provided to landowner was considered as a works contract service. Based on works contract service, the value was determined and tax was paid. To that portion, you were allowed to claim ITC. Now, there may be a case that your service tax return, you might be having a transitional credit based on your return. One. There may be also a case you might be having a stock on which you have availed the ITC lying as on before the GST coming into picture. Then you may be also having a stock which is unsold, flat which is booked in pre-GST design, and flat which is booked in GST design. Now differentiating between all of this, coming to the part of where you are having ITC lying under your service tax return. Similarly, like as we have Rule 42 and 43 for the purpose of reversal of common input service on the construction service. Similarly, there was a rule under SANVAT credit rules which deals with the reversal of ITC where the goods are sold before OC, after OC. Over there also, like the way it is worded in Rule 42-43, that you have to do your final ITC calculation, because under GST regime also, prior to 1st April 2019, ITC was allowed. After April 2019, ITC was disallowed. But the person who were in between those period, ongoing project, who might have opted for the old tax regime or continue with old tax regime, they would be doing this calculation. Similar calculation was there under the standard credit rule. So if you have any ITC which is lying in your service tax return, you can carry forward to the extent of IT tax which you are going to pay on the projects, on the flat which you have booked before pre-GST, before OC, on which you are paying service tax. To that extent, only ITC is allowed to carry forward. Similarly, for the stock which is lying on 30th June, proportionate only you can claim. The flat which is unsold, and if you have not received OC, then to the part of taxable, it will be restricted. And to the part which is sale after OC, you have to disallow your ITC. Reversal of ITC is required to the extent you are not paying tax. So flat which is booked in service tax regime before OC, on that you are paying service tax. And when it come under GST, when the point of taxation will be arised under GST, you will be paying GST on the same. To that extent, you can avail the ITC. Flat which is booked in GST regime, again it depends, it is before or after. If it is before OC, and then you would be allow ITC. If it is after OC, then ITC which is lying to the extent of unsold unit, you have to reverse.
Okay, I think what I want to add here is basically now there is no way we can avail a transitional credits. The time limit and the revised time limit, all of them have gone. Only what I want to highlight here is if some of the past demands comes up and you have not transited any credits into the GST regime, and if any service tax notice is pending or service tax demand notice was issued before the time period has lapsed and you're contesting and demand comes upon you, then always you have a right to seek an adjustment of that credit which was already rightfully availed. Point number one. Point number two, if you had a chance to avail a credit, but you had not availed that particular credit, and there's a demand which is coming in newly, which you had not coined out in the earlier regime, then the demands are being issued now. So there is one decision of Honorable Supreme Court in the case of Pharmica India division, where it says when you have not paid tax and understanding that it was not leviable to tax, thereby you have not taken a benefit of input tax credit, then you always are entitled to seek for adjustment of a credit which you would have claimed otherwise, though you have not followed any procedural aspect which is required to have been followed. In fact, we do not know to what extent we can also use this decision in the GST regime, but definitely in the service tax regime, this decision was accepted and was being appreciated. So you can always look at anywhere in the transition credit if something is not availed, lying, but if there's any demand for the past, since we are talking about the service tax notices, you can always make use of this proposition. That is what essentially I want to say on this slide. When you would like to say something? Mute. When you are on mute.
Sorry. Though sir has mentioned about Durga projects AR, and it's very clear that we should always take the AR with a pinch of salt. They're always binding definitely on the SSE, and most AR are all revenue biased. But we can also look at as to what is their thinking of how they are going. This slide is important because when there is a transition is happening, if you can bifurcate how much amount of the work which you have done, please note how much amount of the work that you have done, that is one side. How much quantum of the monies that you have received from the customers, there's the other side. How much amount of the invoices you have already raised to the customers, whether or not they have paid. If you can differentiate that between and make a clear-cut line where you are establishing that this is a liability that would be payable under the service tax or erstwhile regime. definitely there would be a difference of the tax rate owing to the availability of the input tax credit. And under the S12 regime, most of the people have not opted for the input tax credit and went on and abated. While under GST, it was straight 1/3 and you were paying effectively 12% with input tax credit. So the credit was also available to the stock that was lying as on that date. However, the transition provisions were not as detailed as how we had pre-war 2019, where the people who are migrating to 12% regime to 5% regime, where we multiply F1 to F2, F2, F3, and to the TC, the credit that is attributable to the projects that where you are eligible to the credit. So, which is very detailed mechanism. Hence, you could not really quantify taking how much of the credits that you will carry forward. Would I do materials that are lying on the ground, or would I also include the materials that I have also applied to the building? Going back to the erstwhile judgments where in L&T, where it becomes the building. So why will it be part into the transition credit was a big debate those days. And as Rajesh sir rightly mentioned, now it has become history, because after reopening of the transition credits also, if we could have carried forward, and most times we have advised whatever equate the supply, basically how we in accounting terms we call a matching concept, match your revenues and the cost. So to that extent you could have carried forward, and if you have not done, nothing can be done. But there would be a line that can be drawn as a quantification out of any of the following parameters: work done, invoices raised, money received. So that should be a quantification, something that should be drawn. And in the earlier slide, we have negated about 142 subsection 10. However, 142 subsection 11 will now become effective, saying that, okay, so much of the work you are apportioning to the erstwhile regime, the total value where the levy is applicable, I would be computing, and the balance I will be levying under GST would be the position of the department. So now we are moving to a subject called valuation. So levy is ascertainable, applicable. So the position that would come up, since you have not paid so much for service tax, I would offer the balance to the GST. In fact, that is what kind of the Durga Power, where they were saying that they would want to levy the taxation in those manner. So 2 points. One, there is a clear demarcation of the levy. Point 2, there's a difference in the valuation, the levy would come up, is something which we need to be mindful of. Yes, Ashika, continue.
So over here, we are discussing a situation of flat which is booked under pre-GST regime, but for which payment might be received under GST regime. So, like as we discussed, like Rajesh sir pointed out, that there is a two important thing to be kept in mind. One is levy, one is collection. So, like he discussed about excise, that on manufacturing levy get arise, but liability to pay tax arise when the goods are removed. Similarly, like under GST, we have time of supply for services, section 13. Under service tax, we have a point of taxation rule 2011. Under service tax regime, point of taxation says is date or stage where your liability, or where as per the contract, the payment become due. Because construction service is like a continuous supply of service. Over there, most of the people don't raise invoices at each step. They raise a demand letter whereby they send to their buyers and say that your payment of this much has become due. So when the payment become due, that become your date of this arising of your liability, your point of taxation, or in case you have received advance. So it will be date when the liability arises for the buyer to pay the amount to you, or when you receive the payment, whichever is earlier, your point of taxation arrives, your levy arrives, and you have to pay service tax on the same. Similarly, under GST also, section 13 also says the same thing. Invoice date or a payment date, whichever is earlier, your levy arrives and you have to pay the tax irrespective of the fact when the collection of the money is paid. So as per the agreement to sale, if you have written that suppose on 30th April, your 10% of the booking amount is become payable. Even though that 10% you have not received on 30th April, you might have received after 3 months, 4 months, whatever may be the situation, your liability to pay tax on the same arises on 30th April. Now coming to a situation where you have entered an agreement prior to GST. Agreement entered in 2016. In April 2016, maybe the payment became due. Maybe your buyer might have paid you in July 2017. So even though liability arised in pre-GST regime, payment received in GST regime, it doesn't mean that you are liable to pay GST on the same. Because levy has arisen in service tax regime, tax should also be paid under service tax regime, not under GST. So this is very important for the agreement which has been entered under GST regime, but which has been continued till GST regime. So this point need to be kept in mind while discharging your liability, because this will also help you in case where there is a dispute going on or some question has been raised by the officer why you haven't paid GST when you are showing as advance or amount received in under GST regime. So you want to add something?
Nothing. Maybe I think whenever the questions come up, we will take up this because there would be some questions that might be there. We'll take up at that point.
Another disputable issue is development right. Like we discussed under GST, under service tax regime, there was a no concept of development right. So no taxability arised at the side of a landowner under forward charge or at the side of the promoter or developer under RCM. There are two legs of transaction under service tax regime, that is transfer of construction service from developer to landowner or sale of landowner or by developer to buyer. What would be the situation where you have entered your JDA agreement prior to GST regime, but allotment or flat has been transferred to landowner under GST regime? That's the point of dispute, which maybe many of you must have received a notices where they might have said you that as the allotment of the flat or units you have made under GST regime, you should pay GST because GST is over there. Under GST regime, you have to pay tax on 2/3, whereas under service tax, it was only on 25% due to abatement benefit, which they have given is very huge. Under this, as we discuss, point of taxation, that is the levy, it plays a very important role. So you can take the point that this agreement was entered under service tax regime. It was agreed to be provided under service tax regime. Therefore, tax should be computed under service tax. And as Rajesh sir said that time limit, because there is a time limit to issue the show cause notices under service tax. Like GST, we have 3 years and 5 years for non-fraud case and fraud cases. Like there also under service tax, we have the limit of 1 year and 5 years. This is also now has become 3 years and 5 years in service tax regime also. So by taking this contention, because levy has arisen under service tax, GST should not be demanded. Based on time limit, you can put forward one point whereby you can fight and say that no GST applicable on the same.
Yeah. So the point here, very important to note is if the levy is under service tax regime, the demand should also be under service tax and it cannot be a demand of GST. And non-payment of service tax will automatically not become a liability not paid under GST. There should have been a demand note, assessment, everything should be under service tax. A demand of service tax which is not paid would be recovered under GST, which is different from a non-assessment of service tax cannot be an assessment of GST. So that is a one important point one should also be very cautious of. And the computation, wherever you have the liability, when you still have an option to be computed and adjusted and paid, and if you have discharged as a service tax, department cannot say that, okay, I will compute under GST at a higher rate, and the differential amount, whatever you have discharged under service tax, paid under GST cannot also be applied. So it is not a mechanism to increase the revenue, it is a mechanism to assess a right tax. I think we have come to the end of all the points that one needs to be mindful of. Now we are open for questions. Of course, we have already exceeded the 13 minutes, but still, nevertheless, we are here for some more time, and we'll take up the questions if any. You can unmute yourself, or you can put your questions in the chat, and we can take up the questions. And a copy of presentation would also be shared to all the registered participants. So you can always get in touch in case if you have anything unanswered and you come up with, when you look at a notice, I would only advise you go back to the drawing board, look at the numbers and allocate them accordingly. And because there are chances that when the department is doing the assessment, they would be always on the higher side, increase the valuation, disallow the input tax credit, all those things come up. There's a question coming where a customer is shifting the investment from project A villa to project B flat, where project A was 18% and project B of 5% GST, how would consolidate the issue? Mr. Chanjal, the point here, okay, this is, though there is a transition, this is transition from GST to GST. In one of our earlier session, we have addressed this issue. Now, most builders have multiple projects under single entity, or for each entity, they will have multiple projects. Now, I will take a situation where two situations could, under one company name X, XYZ Private Limited, I have two projects. Customer is swapping from this project to other project. Situation two, in the same project, 2-bedroom flat to 3-bedroom flat. So he's upgrading under one GSTN. Vis-a-vis, he is moving out from this GSTN, he is opting to a project which is under another GSTN, but same group. In all the situations, it is cancellation of a supply, a credit note has to be issued owing to section 34. Within the specified time limit, if you are issuing a credit note, you as a tax service provider, you can offset the taxes that you have already paid with the future taxes and give due credits to him. In case the time limit has passed, the customer should file for a refund because the supply is not complete. However, you should support with a declaration that you have paid the taxes to the government. Customer will get the refund. In any case, the shift cannot happen in gross to gross. Let's say I have paid 1 crore to you and I'm moving to another project which is say 1.6 crores. I will not just pay 60 lakhs. I also need to adjust for the GST because I have to claim as a refund from the government. Because you cannot suo moto offset. You are not an assessing officer. You cannot adjudicate your own case. So you still have to issue a credit note if you want to reduce your liability. In case you cannot issue a credit note, you should allow the recipient to claim a refund for it. Hope this answers your question. Any other questions? All right. So I think we can conclude for today, and special thanks to Ashika for doing the research on couple of points and putting up this presentation. And Rajesh sir, I know you've been traveling, but you have taken your time out and you are here. Thank you for that. And as usual, RERA consultants, good job for month on month putting up sessions and educating the members. For all the participants, whichever is your registered email ID for this session, you will get a copy of this presentation. Feel free to get in touch if some of the points were still not resolved, or if there are any clarification further, we can take up one-on-one and discuss. Thank you.
Thank you, sir. I thank all the speakers for giving us a valuable time and educating us on handling GST notice for carryover projects from service tax and VAT regime. Dear participants, thank you all for participating in this session. Hope this session was informative and knowledgeable. If you have any queries, please do contact us. And as sir told, we will mail us the link so that you can see that whatever today's session in the link through link. Thank you, sir. Thank you for all. Have a nice day.
Thank you.